John, what's up, brother? Hey, how you doing, man? Me, actually, I can't hear you. Oh, I've got you muted. Sorry.
There we go. Can you hear me?
Yeah, I can hear you.
You okay with the headsets? I could take them out. I just figured,
No,
it
that's
might be
great.
good.
But yeah,
Yeah.
no, I'm good with that.
Good. How are you?
I'm doing really good, man. One second, all right?
Yeah, yeah.
I'm doing really good. So
Good.
we have Leah's parents are in town. Uh,
Nice.
his parents are in town. It's cool because the baby really hasn't seen many people, and they were here when we first had the baby. But
Right.
they went back home and they haven't come back for the last 8 weeks. So
Wow.
yeah,
And
so
that's
they're
and that's
seeing.
Leah down here now. She's joining us.
Yeah, she's calling in.
Nice.
Yeah.
Good. Hi, Leah. Good morning. Good to see you. Or good to hear you. Hopefully, we
All
get to
right.
see
Yeah,
you.
I could probably.
That's fine. No, that's all
Really-
good.
Yeah.
I'm glad she's on too. So the baby's good.
Yeah. She's 10 weeks, so she's growing quick. She's moving around.
Nice.
That's cool.
Oh, that's great, man. I'm glad to hear that. Now, you guys are in Maryland, right?
We live in DC, so we're
Oh, okay.
we're we're right off of we're just north of Adams Morgan.
Yeah. Oh, I love that area. We did our first development deal down there off of Lanier Place.
Yep.
And it was a little 8 unit. I'll have to send you the address, 1726 Lanier. And
You look at
we converted that from a row house and added the back end and put 8 condos in there. We being the developer, and we invested about $500,000. It was a great little project. I mean, we could, today I'm going to go through a few things, but I want you to be able we could have just a conversation and we could share and talk a little bit about some of our deals that we've done.
yeah.
So whatever you
That's what I
want to
was
do
actually
on
going to
yours.
talk with you about. Is I was looking through your slides, and do you want me to pull them up or do you want to pull them?
I'll share my screen.
Okay, cool.
I'll share my screen. I
Yeah.
updated one of our pictures. We got a pretty neat rendering. Matter of fact, let me go ahead and do that so we can at least, if you want to disable, if you can enable me to share my screen, that would be great.
Okay, hold on. I'll
Yeah,
make
no
you a
worries.
co-host. I think.
Yeah, there you go. Perfect. And then
Yeah,
I'll
you should be able to
also,
do it. Okay.
maybe we could put, if people want to use the chat box. Are you going to record this? I'm fine if you record it. I think
Yeah,
it's a
I'm gonna
good
record
idea.
it. Yep.
And it would be good because I'd love to be able to share it on my social media. I got about 4,000 people on LinkedIn, and it'll also get
Awesome.
you a ton of exposure. Also, what I was going to do too is I was going to share my screen on like my website, and then a couple of very short but cool videos of some of our projects. So
Yeah, that's awesome. We're
yeah,
recording right now. I'm gonna let some other people in right now too. So
yeah, go ahead, please. Are you okay with this background, or if you
no, I love
want,
it, man. I
we could
love it,
do
man.
this one
Yeah.
too if you think this one's better, but it does make me look a little funky.
No, this is great. I like that. No,
Okay.
I like the other one better.
All right, cool.
Joyce, you there? Hey, Joyce, how are you?
Great. How are you?
I'm doing really good.
Good,
Doing good. Just
good. How's the baby? And the new mom?
she's doing good. She's getting big and she's moving around. She's really lifting her neck up real high and she's kicking around and moving her arms and stuff, trying to figure it all out. So she knows she's getting strong. It's cool. It's
It's a
really
it's a
interesting to see.
wonderful thing.
Yeah. My biggest takeaway from having a baby is that, like, even though you don't want to get up in the middle of the night and go get her when she's crying or wants more food or whatever, you go up and do it, right? And if you relate that to like your real life, like you have ideas, you have dreams, you have thoughts that are all, popping in your head here and there. And basically they're crying. And like, if you don't have the ability to listen to those dreams and go after those dreams, it's like, whoa, you start to really kind of like relate having a child to real life, and I think that's like really powerful.
That's a good one.
That is.
Yeah.
I'd say when you're ready for your second and third, you can borrow one of my 4 anytime.
Yeah. No. Yeah.
Good morning, Joyce.
Good morning.
Yeah. So John's
That's
gonna be
great
our
to-
guest speaker today too.
How are you, John?
Good morning, Joyce. I'm happy and blessed to be here with y'all. I'm really excited to be here.
Well, I understand you're going to give us some pearls of wisdom.
Well, I'm gonna try. I'll let the good Lord do the work, and I'll just be his branches. He's the vine, and I'm the branches.
Great.
Yes.
Great analogy. Great analogy.
Yes, ma'am. There she goes, Oliver.
Yeah, you can hear her.
Yeah. She wants to
Hey,
join the
this
group.
is real life. This is real life. This is not. This is not imaginary.
She wants to jump in
Ayana,
the
how are
call.
you? No, I'm mute. Ayana, 1 second. How do I unmute her? Let me see. Okay. Let me see. I don't know. I can't unmute her. Brian, how you doing, brother? Can you hear me? Brian, you there? Brian? I don't know. Yeah, so yeah, everything is going good, John. Just trying
Great.
to stay focused and
Yeah, what great news we had yesterday about the jobs report. I mean, that just blew us away. I mean, after a very tumultuous week, which again, obviously it's been a lot of pain this past week, but at the same time, our hearts and prayers and thoughts are going out. But from the economics side of things, it just blew us away and gave us some hope that hopefully the economy's turning around as we heal our nation. So hopefully that helps and gets us back on track. And
yeah.
I think that's going to be helpful. I think we were all expecting 20% unemployment yesterday, and another 8 million or 5 million people unemployed. So yeah.
Yeah, what I found to be really interesting is like how resilient, like after all of the stuff that happened. I mean, we're basically in the worst times that we've ever seen since the Great Depression.
Amen.
How resilient multifamily has been. I mean, it was really, really, really inspirational for me because
Yep.
I was into real estate in 2008, so I was at the bottom.
Yep.
So like I've always heard the foundation that real estate brings, but I've never like really experienced like how strong it like specifically multifamily in a situation where there's a lot of moving pieces and a lot of movement. And it really just goes back to like survival. Like for survival, you need three things. You need food, water, and then shelter. And in this situation, real estate where we're at is shelter. And shelter is what you need to protect number one and number two.
Right.
We saw how resilient like all of that stuff could be.
Yep. I just shared in the comments box too that I read a great article, and they're talking about how multifamily is doing really well as of the 29th of May. So sounds like you got some folks coming in. I'll
Yep.
go ahead and pipe down a bit. I think we can hear Brian now.
You can? Brian, you there?
Hey, Oliver, can you hear me now?
Yeah, I can hear you.
You never get the audio quite right on this thing.
How you doing, brother?
Fantastic. How you doing?
I'm doing good. We have Leah's parents are in town this weekend, so we have that going on, and just life happening. It's a lot of moving pieces, a lot of craziness. But that's kind of the game.
I love it.
Yeah.
Morning, Brian. How you doing?
Morning. How are you?
I'm good. Good to meet you and see you in person or on video.
Yeah, absolutely.
Yeah. Where you calling in from?
Calling from Syracuse, New York.
Oh, nice. Very
Upstate.
cool. Yeah. Go Cuse.
Yeah. Where are you calling in from?
I'm in Northern Virginia, but I'm originally from Brooklyn, New York. So.
Oh, awesome.
Yeah. I got a very good friend who's from Syracuse. Yeah. You guys getting some warm weather up there? Or is it still kind of?
Yeah, we went from the 20s straight to the 80s, 90s.
There's no stop. Syracuse just goes bang and bang.
There's no spring.
No, it's crazy.
I kind of felt like DC did the same thing though. It was like
yes,
cold, and then all of a sudden this week was just like couldn't even breathe.
Yeah, about 3 weeks ago. I think we were still in the 50s 3 or 4
Yeah.
weeks ago. Yeah, now
Yeah.
it's like, holy cow, what happened?
Yeah.
Yeah.
Yeah. So let's give it about another 5 more minutes and then we'll get started.
Sure.
We
Absolutely.
got Sammy on the line, it looks like. Sammy, how you doing?
Hey, good. How are you?
Doing good. What time is it in California?
6 a.m.
Oh, wow.
We got the diehards. These are my people. They want to talk real estate on
Oh,
Saturday.
man.
morning.
The seat's getting a little hot, Oliver.
Yeah. No, these are my peoples.
Good. Good. I'm excited to talk to them and meet
Yeah.
them and learn from them too. We're all
Yeah.
learning, right?
Right. Let me see Melissa. Let me see if I can unmute Melissa.
Hi,
How are you?
good morning.
Good morning.
Hi.
How you
guys
doing?
doing? I'm good, thank you. How you guys doing?
We're doing really good. Doing good.
Good morning, Melissa. Good to hear you.
Hey, hi John. Good morning.
Where are you calling in from?
Rockville, Maryland.
Nice.
Awesome. Rockville. My sister used to live in Gaithersburg, and I used to live with my sister. So
Oh, that's not far from me.
yeah, we used to. I mean, everything is Shady Grove up there, but we used to live off of Shady Grove.
Ah, nice. And where are you at now?
I live in DC now, off of in Adams.
Oh, you're in DC.
It's north
Oh,
of Adams,
nice.
Morgan. Yep.
So you get a share of the 90-degree weather today.
Oh yeah. The one good thing about going out in the warm weather is literally, we have a new baby. So she's 10 weeks old. And the one good thing about going out in this warm weather is like we get out there and in like 2 minutes, she's like out like a light. And we come home and she sleeps through the entire night. So that's the one
Yeah.
good thing.
The heat tires you out easily.
Yeah.
Mhm.
I tried walking my steps outdoor, but I didn't last very long.
Yeah. Well, thank you. Well, Joy having you here.
Thank you.
Yeah. Let me see where Perry is. Perry, how you doing, brother? Gotta wait for him to unmute himself.
All right, one step at a time here. Let's see.
How you doing, brother?
I'm doing all right. How about yourself?
Doing really good. Doing good. Here it's supposed to be a hot one today.
Yes.
Is that a real background? That looks.
I wish, man.
Oh, I was gonna say, man, you're really living the life.
I'm planning the vision, That's what
Yeah.
I'm doing.
Yeah. Yeah, we're gonna talk about that a little bit today
There
too.
you go, man.
Well, I
Work from
appreciate-
there.
Yeah, no, that's beautiful. Where's that background from?
I don't know. I'm not sure if it's like one of the default ones in Zoom or if like I got it off of one of the Pixel Bays or something like that. But
Got it.
look for something to look realistic as opposed for me like floating out in space or something.
Yeah. Yeah. Cool.
So how's everything going? I guess.
Awesome.
Yeah, okay.
Ben, how you doing, brother? Trying to unmute Ben.
Perry, where are you calling from?
I'm from Bowie, Maryland.
Bowie. Very good. Nice.
How
Excellent.
about yourself?
I'm in Northern Virginia, here in Fairfax County. But
Okay.
I lived in Pax River, Maryland. I was stationed down there for 3 years. So I used to drive through Bowie a lot. What is the other town?
Like
Starts,
301 route?
Crofton. Yep, Crofton, Bowie. Yep.
Waldorf, all that stuff, right?
Waldorf, yeah. Those are the days.
Well,
Yeah.
now it takes like 2 hours to get through there. So
I know. It's crazy. It's crazy. Yeah.
Good.
Oliver's been telling us about his wonderful newborn. 2 of my 4 kids were born in Maryland, and our doctor, the pediatrician, was from Bowie. She was amazing. She's a great woman.
Cool. Yeah, so let's get started. It's 9:05. So let's get this rocking and rolling. Let me just do this real quick. All right, cool. So everybody, I don't know if you all know me, but my name is Oliver Fernandez. So my intention for creating this meetup was I wanted to create a community of real estate investors here in DC And then obviously with COVID hitting, you know, we went online, and now we're creating this meetup of people that are joining us nationally all throughout the United States. And I'm really excited about it. So the main reason what I wanted to do was I wanted to be able for us to all come together and be able to share our ideas and our experiences so that we could all grow together faster. So today I have a guest speaker. His name is John Rubino. He's on the screen. He's on the chat as well right now. And he's going to teach us all his really cool system of how he raises money. But before I bring John to you, I want to go through a couple things first. So multifamily real estate is what we're going to talk about today. And there's two types of multifamily real estate. There's residential multifamily real estate, and there's commercial multifamily real estate. In the chat, type in what residential multifamily real estate is. In the chat, if you would, type in what residential multifamily real estate is. 1 to 5 units. Yes. 1 to 4 units. 2 to 4 units. Yeah. So multifamily is going to have, like, you know, more than 1 unit. So 2 to 4 units is definitely where multifamily residential multifamily is going to be. Now, commercial multifamily, in the chat, type in what commercial multifamily is. 5+ units. Yes, exactly. So that could be 5 units, 1,000 units, 200 units. Yeah, that's going to be all commercial multifamily. Never mind, I see it's on. Okay, cool. So, so John is going to show us, you know, how to raise money for multifamily real estate deals. And I want to share with you guys just a little secret. And that little secret is that John is going to teach us how to do, but all that doing isn't going to even amount to anything if you don't first do this one, mobilize your mindset. So can you guys all see the screen? So what John is going to do is he's going to teach us step 2. And this is going to be how to raise money, right? But what you first need to do, right? Step number one is mobilize your mindset. Pull this closer so you guys can see that. Cool. So mobilize your mindset, right? And you guys are probably like, Oliver, what do you mean by mobilize your mindset? So number 1 is going to be belief. If you don't believe it's possible, right? If you don't believe that you can get into multifamily real estate, if you don't believe that you can actually raise money in multifamily real estate, it's never going to come true. And for me, my belief was started when I was a young boy. So when I was 5 years old, I was born in Boston, Massachusetts, and I moved to Maine with my mom and 3 sisters. And my mom was a city girl. She never grew up in the country. She never had any experiences really in the country. And all of a sudden, it was my mom, my 3 sisters, and I living in Maine in the middle of the country. And, you know, we had like all these like different experiences. Like in the middle of winter, we'd get ice storms. My mom never dealt with an ice storm. And these ice storms would freeze up the trees, and then the wind would come and they would knock down the branches onto the power poles. So here we are, we're living in Maine, and we have total unknown circumstances to us, and all of a sudden we have no power. And I watched my mom not just sit there, but she believed it was possible. She believed that like we could survive. And in doing so, we went out to the woodshed and we got wood to light a fire for our home. And that, as a young boy, that taught me a really powerful lesson, that even though you don't know what the next step is, if you believe you can make it happen and you go after it and start making it happen, you can make it happen. So that's step number 1 in that mobilize your mindset, right? That's going to be belief. You know, John's going to teach us how to raise money in real estate, but belief, getting yourself the ability to believe that it's possible, is what's going to help you be able to actually implement what John is going to teach us. Step number 2 is going to be commitment. And commitment is one of the things that like most people struggle the most with. Like you see a lot of people like going after things, and then all of a sudden they divert, they don't actually see it through. And it's because of commitment. They're committed to things in their life. Like I'm committed to things in my life. Everybody's committed to something in their life. They do something every day. They do something that they focus on something. That's step number 1 with commitment. Like if you want to be in multifamily real estate, you need to start focusing your attention on multifamily real estate, right? You have to be persistent. You have to overcome the challenges in multifamily real estate. And when John's speaking, start listening and focusing on how is John actually getting the results? Listen to see if he's focusing on things. Listen to see if he's overcoming things. And number 3, with being committed is being consistent. Listen to see if John's being consistent over a long period of time. And then we'll start to see why John has the results that John has. So number 2 in mobilize your mindset was commitment. And the third one is going to be, you need to take the necessary levels of action. So there's 4 levels of action. There's do nothing. And then that's like when, you're at home, you're sleeping, you're doing nothing, you're in front of the TV, you're just consuming stuff. You're not really actively doing anything, right? Then there's retreat. And retreat is like when you pull back, like we kind of were forced into a pullback with COVID, like you couldn't go out to stores. You couldn't, like the government told us all to stay in our homes, right? So that's like retreating. That's like you setting a goal and then like you're not really hitting that goal and you start to pull back. You start to say, hey, I need to figure out something else here, right? Then there's average levels of action. And average levels of action is actually the most dangerous, because average levels of action tricks your mind to actually believe you're really doing something, when in reality, you're not doing enough to actually reach your personal and professional and financial dreams. And the fourth level of action is going to be taking massive action. So if John does one thing, I need to do 10 of those one things, right? I need to take the necessary levels of action to actually make my dreams and goals come true. Like a lot of people will just take one action and sit back and wait. That's not what life's about. Life is about taking 10 actions and expecting 6, 7, 8 of those actions to fall and not amount to anything, but 2 of them do. And those 2 are the ones that are going to help you achieve your dreams and your goals. So if you don't mind, in the chat, let me know what you believe is possible for yourself in multifamily real estate. In the chat, let me know what you believe is possible for yourself in multifamily real estate. I mean, it could be $1 billion, Michael. Great. And I love that, Michael, But one of the things that I'm trying to focus on, because like honestly, that's my goal too. But I know to get to $1 billion, I have to get to 100 million. And then I know to get to 100 million, I have to get to 10 million, right? So those big goals are great. Like I shared this with you guys last time, maybe probably it's been a month now, but I started running again. And when I first started, I've never run a marathon in my life, but I was like, I want to really run a marathon. I really want to run a marathon. And that marathon is that $1 billion goal, right? But like, for me to run a marathon, I need to be able to run a 5K. I need to be able to run a 10K first. So like, break down those big, massive goals into those little incremental goals that you can actually accomplish and actually feel good about it. Because what's going to happen is once you start achieving those goals, those smaller goals, that's what's going to give you the confidence to actually go hit that $1 billion. Yeah, so we got Perry's like 25K a month in passive income. I love that. I love that. Financial freedom, as Carlos says. Owning $1 billion in assets and income. I love that, Garth. Totally on the same page as you there, Garth. But again, remember, to get to $1 billion, you have to get to 100 million first. And to get to 100 million, you have to get to 10 million first. Build a portfolio of operating assets with, James says, build a portfolio of operating assets with positive cash, positive returns. Love that. I mean, yeah, that's the holy grail, you know, having having assets throwing off cash. I know Brian Kenny, he's smiling over there because he knows all about cash flow and assets. So, yeah, that's the holy grail of like, of investing is cash flowing assets, you know? And we saw I was telling you guys earlier, during COVID, I mean, everything was shut down and we saw how resilient multifamily real estate has been. And John will go into this a little bit, but we saw how everything crumbled around us, but multifamily was still generating cash flow. Because we need 3 things to survive. We need food, water, and shelter. And that shelter, number 3, multifamily real estate, actually keeps number 1 and 2 safe, right? So let's see where we're at. So John is going to talk to us about the number 1 problem most of us run into when we want to get into real estate. And it happened for me too. You know, you're like, oh, I really want to get into real estate. You read a couple books, you start listening to people, because a lot of people talk about real estate and they say how good of an investment it is, right? And you do the research, you find it, and you're like, wow, I really want to get into real estate. Then you run into your first problem. I don't have any money. And I did the same thing. You don't have any money, so you feel like, oh, I can't get into real estate. And then you divert, you take your focus, and you take your focus off of real estate and you go to the next thing that may be easier, or you put your focus on what you're currently doing, right? We put your focus on your current job and say like, all right, I got to make more money in my current job. Instead, what we can do is, yes, it does take money to get invested in real estate, but does all that money need to be your money? And that's what John is going to talk with us about today. So I'm going to bring John to the screen. John, are you there?
I am, sir.
Awesome. Cool.
Some big shoes to fill there. Thanks so much. That was great. You know, you said today that I'm going to teach folks. I think that my goal here today is share. I'm always learning, and we may be people that know a little bit, or have gone through experiences, or you know, have done some different things and grown, but the goal is really to share. So I'm humbled and I'm grateful and blessed to be with everyone today. Oliver, thank you so much for having me. I was so excited about this, and to have 20 plus 23 people here today is amazing, and a test as a successful businessman, as a father, as a husband, and as someone that wants to share and give back to others, which I totally respect and admire immensely. So thanks.
Yes,
I am so grateful to be here. Where do I start? So my goal today really is, again, to hit on number 2 on Oliver's list of how to raise money, and really show you how I did it through my company, through my experiences. And I don't want to pontificate too much, so I do want you to jump in, maybe use the chat if you have questions. Oliver, you run the show if you need me to stop, pause, if people want to jump in.
Yeah, exactly.
This is interactive. I'm not here to you know, be an instructor in a master's or in a college course. You know, this is hands-on, so please feel free. So I started my career in real estate during another career in my life, which, if you can see behind me, I was a pilot in the Navy for 20 years. And I graduated college in '97 back in New York. I'm originally from New York. Brian and I were talking. He's in Syracuse. And I joined the Navy. I became a pilot, and I served my country for 20 years honorably. And the skills I've learned in the military have been immeasurable to bring over to what I do now in real estate. But I think the number one thing I did that was smart about getting into real estate full-time was I started my business, and I started my journey in real estate, again, while I was in the military. Why? Because I had a full-time job. I was giving back and serving my country, and and, getting paid every 2 weeks, which was nice. But at the same time, I started exploring real estate. I started exploring what I really want to do, my passion. And when I started reading, which to me is the greatest book ever made, I'm sorry, is Rich Dad Poor Dad by Robert Kiyosaki. Robert is a very much he's adamant about the fact that if you want to get started in anything, in business, you want to start your own company, is stay with your full-time job, because like Oliver said, that's going to give you food, water, shelter. It's going to take care of your family as you explore the next stage in your life. I meet a lot of people all the time that say real estate is great. I'm not sure if I'm ready to take the plunge yet. It's kind of more of a hobby. I do it in the evening or on my free time. It's a lot of hard work. And like Oliver said, commitment. You got to put your mind to it. But you have to think about what you want to do in real estate. Do you want to be a wholesaler? Do you want to be a flipper? Do you want to be a syndicator? Do you want to be a multifamily developer? Do you want to be a multifamily investor? These are the things you got to put down on paper when you start to brainstorm how I want to do this in reality. So these are all the things that I've learned, and I'm going to put up a PowerPoint. We'll go through that just for structured purposes. Being in the military, I'm a little more organized, so we'll go through that. But I want to share with you what we do in our company. I want to show you some information and share some cool stuff we're doing, and then I want to share with you how I went about getting my business plan started, who I put around me to succeed, and that is very important. You have to have at least one mentor. You have to have at least one person that you can go to bounce ideas off of. And in my situation, the one person I went to when I got the ball rolling is now my business partner. So I guess he liked what I wanted to do, and he decided to join me. And now together we do this together as partners. So it's really important. So let me go share my screen real quick.
Hey, John, I do have a question for you.
Yes, please.
What were like some of the challenge, like what did you have to overcome to like transition your mindset from like, hey, because your pattern was 20 years of military.
Right.
All of a sudden, like you started to transition your mindset to like be in real estate. Can you share like what shift happened for you? Like what were you thinking? Like,
yeah, well, I mean, the first thing that always happens to you when you find something you really, really like and you're passionate about, you get this burst of energy, right? You're like, oh my gosh, I want to do this. It's so exciting. Let's do it, And then you're like, wait a minute, how do I do it? Where do I do it? What do I need to do? So you get all this excitement that you want to do this, but then you got to come back and ground yourself to say, here's how I got to do it. I got to sit down. I got to put my mind into what I want to do. So when I started back in 2005, while I was still in the Navy, I was in Southern Maryland, and I just got hooked on it from another friend in the Navy that was doing it. By the way, he's now a $400 million development company, and he was my mentor, and he got me hooked. And he started talking to me about investing in property and probate, foreclosure, talking to people about their properties, looking at the analytics and the demographics. So I started taking all of this stuff and writing it down, just taking a journal and writing it down. And the commitment was, I want to do this. I want to do this. How do I do it? I'll find out how I want to do it, but I want to do this. And I started doing it slowly. I started thinking about, hey, maybe I can be a renovator, a fix and flipper. Maybe I can be a wholesaler, so let's learn more about that. But the goal in my mind was I wanted to do it. And it drove me every day to get up and say, I want to do real estate. I want to learn more about real estate. I want to get better educated on real estate, and then kind of feel which direction I went. And for me, the direction I went was investment, was raising money, was being passively investing, just given my situation, which I'll talk about, given the fact that I'm good at raising money. I'm good at talking to people. I'm good at bringing people together for relationships. And so I took those skills that I have and I brought those to real estate. And how do I do that? Well, I take development partners and sponsors that have, millions of dollars in projects that they're going to execute. And I take investors that are friends, family, people I served with in the Navy, public investors, people I've met, and I bring those two together, and I'm the person in the middle. So I allow the investors to participate with the sponsors, and I represent both sides. And that's how I did it. And it's been a blessing. So hopefully that helps answer. I know it's probably a long answer to a short question, but that's how it got me going and how I found myself. So, so yeah, so that's how kind of I got going, and I've been running it. So let me go ahead and bring up my screen. And again, this is purely just, I'm going to go through these. I'm not going to spend too much time, but I still do want to give you a sense of what I do, some of the projects I'm investing in with my business and with our investors. And these are really neat projects. A lot of them are mixed use, condo, commercial development, retail, and some very, very large projects where we're raising between $500,000 to $5 million in our company to bring into these businesses and into these projects. And these projects have total costs, total capitalization, we call it CapEx, anywhere from 20 to 100 million plus. So that's how big some of these projects are. Yeah, go ahead.
In the chat, everyone, if you don't mind, if you can, do you know what CapEx is? In the chat. CapEx is going to be capital expenditures. Capital expenditures. John, do you mind explaining what capital expenditures are?
Yeah, the capital expenditures are really the total sources of monies that are necessary in order to execute a project from start to finish. Okay, so when a developer sends you their breakout of cost, we typically call that a pro forma. When the developer sends you a pro forma and you see all of the costs and breakouts, and there's a number at the bottom that says $60 million, that $60 million is the CapEx. And that number is then has to be absorbed through funds or funding or financing that comes into the project, usually in the form of debt, which is going to be typically a bank. They're going to provide 50 to 65 to 75%. Yeah. And then there's 25% of that CapEx number that has to be filled with private money or equity.
Great.
So, and that's what yeah, go ahead.
Yeah. So, so when you say CapEx, that's the money that you're going to use to renovate or fix up or build the property, right?
All the cost that's associated with that project is the CapEx. Yeah.
Got it.
Okay.
Got it. Cool.
So these are just some of the.
You said one more. You said one more term. Then there, pro forma. That's going to be the pro forma is basically the estimates of like how much the purchase price. Well, it's going to be the estimates of what you're going to sell the units for, or what you're going to rent the units for, all of your cost, right?
Yep.
Exactly.
And I'm going to show you. I want to show you real quick. Keep talking. Yeah, keep talking a little. I want to show you this real quick because this is what a pro forma looks like, and I think it's probably good that you guys see that, just so you get an idea. Yeah, keep. Let me,
so the pro forma is going to be the projections for the project. So like,
that's right.
For you to actually go get financing for the project, people want to see what the vision is, want to see what the plan is. So what developers do, what real estate professionals do, what people like John do is they put together projections for like, hey, this is how much it's going to cost for us to buy the property. This is how much it's going to cost for us to renovate the property. This is how many units it is. This is how many the breakdown of the bedrooms and the 2 bedrooms and the bathrooms, right? So you put all of this together, and then you can present it to people. You can present it to the bank. You can present it to other investors.
Yeah, so this is an example of a very large scale detailed pro forma. And just like Oliver said, you have all the details in the first column that talk about the composition of the units, the sizes of the units, and then you have the unit mix and breakdown, you have parking. This is all of the information. So you got you have the building information in the first column, you have the costs in the second column, and then in the third column, you have sales, revenue, profits, and returns. So that's typically what you're going to see in a pro forma page. And that's going to give you all the details that you need to absorb to determine, in my shoes, I'm looking at, okay, what's the returns on this project after all the costs, everything's built, and I bring in my money, what's my returns on this project? Right. So that's just an example of that's a big scale pro forma, and they could be very small scale or larger scale.
Exactly. And like, just so that everybody understands, like, people always will believe what they see. people don't oftentimes believe what they hear. So that's why John has to create those projections, those pro formas, so that people can see what's in the future. Right?
Exactly.
Cool.
Exactly. And
Hold on one
not
second.
only-
Garth said I think I'm getting a bit confused between CapEx and what the total development costs are. My understanding of CapEx is the repair/replacement of major items.
Well, development costs are if you're doing let's say you're doing a development, new construction, or development is the first phase of the project it's going to relate into a larger scale phase. The development costs are absorbed into as part of that CapEx. So your total cost in that scenario would be that you have development costs, but you also have to buy the property. You have to go through, the permitting process if you're going to build something. If you're doing a single family renovation, then yes, he's right. Your development costs are typically going to be your hard costs, and you're going to roll your soft costs in there. So you're going to have one number, and that total cost is going to be your CapEx for that project. I tend to look at it a little bit more holistic, where it's not only the development costs, but it's also the acquisition costs, the debt servicing costs, everything that has to do with cost, I look at as the CapEx. I want to know what the bottom line number is for the cost on that project, so that I then can understand how is that person going out and getting the funding for that. So the worst thing in the world you'd want to see is, let's say, for instance, that a developer says we have 40 million in development CapEx, but they leave another 10 million out. Well, then how do I know what the total cost of the project is if I don't have that data?
Yeah.
That makes sense.
It's basically, you're basically saying it's the total money that's getting brought, that needs to be expended
Expenditures. Yes.
Yeah.
Yes.
out for the
that's-
project to happen, right?
Right. Now, if there's a technical term that relates to it in a way that is just pertinent to certain phases of a project, but I look at it as the total cost. If that makes sense.
We're good to go. He said good.
All right, great. And so let's keep going here real quick. Like Oliver said, and I totally agree, I have this big disclaimer, but the bottom line of this disclaimer is that trust but verify, right? If I put up that big pro forma and I say to myself, this developer is going to do everything here that he says, and I don't do an independent due diligence, I don't go out and look at the market, I don't go do my demographic study, and I bring this to my investors and say, yep, this is what the developer says, this is what's going to happen, I'm exposing myself. So you want to make sure you always do your homework, always do your due diligence, trust but verify. You can meet great people, but at the same time, you still want to make sure you do your homework, okay?
Right.
And that's really the takeaway from this slide. Again, I mentioned a little bit about me. I was from Brooklyn, New York, went to college in '97, was in the Navy for 20 years as a pilot and as an officer, retired from the Navy in 2017, and there's my family, my wife of 18 years now and 4 kids. So I know Oliver's got a newborn. I told him if he ever wants to borrow 1, 2, or all 4 of my kids, he's more than welcome.
I'm one of 4, so I know all about having, a big family. So
Yes,
Yeah.
I know. So I started investing in real estate back in 2005 in Southern Maryland. Like I told Oliver, I was looking at distressed properties, and everybody knows what happened in 08. And I kind of got in right at the tail end. So I had a little bit of success. I made some money. What I found to be successful back then was I was working with the local area home builder. And so the home builder would basically build the property, would assume all of the cost during the build. And then when we got to the point where the home builder was done with the property and was ready to close on the property, I would then take over the financing. So we call that what's called a construction to perm loan, a construction to permanent loan. And what I did was about 2 weeks before the builder was finished and was ready to hand over the keys to me, I put the property on the market. And I was able to find a buyer to buy the home for me before the house was even finished. And so what I did was I did a double closing. So when I bought the home in my name after the builder was finished, I turned around and sold the home for a $75,000 profit, gross, $60,000 net to the buyer that wanted to buy it from me. So I did this twice, and I said, I like this. I'm going to keep doing it. But I decided that I was going to stay in the Navy. I was going to get ready to go overseas for 3 years to serve in Italy. And I decided to take a big chunk of money that I made and invest it passively with a good friend of mine who I work with now. And we came up with a passive investment agreement that I was going to invest in his business. And for that, I was going to get a passive return on my money. So did some active stuff. I made some money. I took that money and I put it in with my friend who manages a $400 million development company now in 2020. This was back in 2006. And for every year, for 7 years while I was investing that money with him, I was making 10% a year. So the thing I learned about that was obviously making sure that the legal documents made sense, that I was protected, that my money was protected. But what was nice was I was getting projects sent to me from this gentleman, and they were, again, pro forma packages, telling me about the property. Where is it located? What are they going to do? What's the demographics? Looking at pro formas. And what that did was it built my understanding of what it meant to be a passive real estate investor, because I wasn't actively managing the project, but I still had oversight of it. I still understood. But yeah, go ahead.
If you don't mind, can you explain what demographics are?
Yeah, demographics really is the composition of a city or a jurisdiction or a market that looks at like the schools, right? Looks at the job market, looks at the income, looks at crime, looks at the amenities. It looks at it's a snapshot of that market. Right. And it gives you data that lets you know the stability of a market. So So in
the chat, if you don't mind, put in there, do you think DC has good demographics based off of what John said? Good job market, right?
Yep, job market, income, population growth.
Awesome.
What is around it? What's around DC? Right? What do we have that helps with jobs? Right. So I think I know
one of the best. James
Yeah.
Dunlap says one of the best. Stable job market. Yes, 100%.
Yep.
We have the federal government here. It's pretty stable.
That's right. Amazon HQ too.
Yeah. Carlos Castro says with the federal government. Yes. Yeah.
Totally. Spot on. But then you look at a market maybe that you don't know so well. Like say, for instance, I get a deal in San Antonio, Texas, right? And so now one of the things I need to do is make sure I have a good understanding of the demographics in that market to support that investment. So I make sure I do a good, thorough review.
Right, because down in San Antonio, they don't have necessarily all of the federal government that we have here in DC, but they definitely have some military bases down there.
Yes, they do.
John Douglas is saying federal government. Yeah, they definitely have the federal government. There's Air Force. There's all kinds of stuff down there in San Antonio as well. We've actually invested down there as well.
Yeah, very good.
Carlos actually asked, what are your criteria points and demographics for a new market?
Yeah, that's a good question. So when I look at an investment, again, I'm looking at what the developer sends. I'm looking at all the information, the numbers to make sure that makes sense. And then the first thing I'm looking at when I look at the demographics is, if this person is going to rent this apartment for this amount, and my sponsor is telling me that every year that appreciation or rent rate increase is going to be 2 to 4 or 5%, does the income that the folks that are going to move into this property, are they at jobs in that area? Is the income going to support being able to pay that type of rent? So that's one of the big things I'm looking at. Yeah,
actually, I love what you just said there, John. Do you mind breaking that down for us a little bit more? So like you're saying, like if somebody makes $50,000 a month or a year, right? $50,000 a year, you're then going to back into how much money they can pay in rent to act with making $50,000 a year. Now, if someone has to pay $3,000 a month in rent and they're making $50,000 a year, the numbers don't work. So
absolutely
into that a little bit for us. So
Yeah, no, that's a great point. I mean, you hit the nail on the head. You have to look at it with a little bit of a subjective eye to determine, like you said, what are these rents bringing in and what are people earning and what's the job market look like? So one of the things I love to look at when I look at a market is when I see factories being built, or I see BMWs coming in, or I see, all these different people that are coming in to continue to grow a market, to open jobs, right? So that's one of the things I'm looking at too, is what's coming there that's going to sustain this market, to grow this market. If there's, smaller occupational type jobs or specialty jobs that are commodity type jobs where they can shut down if the market hits, like a COVID or something, that scares me a bit. Because if the income is good or the person can pay their rent, what is there to guarantee that they're going to be continuing to make that income? What's the jobs that are going to be there to attract people to stay? So that's one of the things that, what's very important when we look at those numbers. One of the other things
Can you take it one step further? So like,
Sure.
say someone's making $50,000 a year, right?
Mm-hmm.
And say that you're investing in a market that charges $1,000 a month in rent.
Mm-hmm.
Overall, that's going to be $12,000 for the year that person's going to be paying in rent. Can you, if they're making $50,000, can they afford that rent? Is that a good ratio for you, or like what's the max that you'll go up to in terms of that?
Well, one of the other metrics I'm looking at too in the analysis is how occupied is that building, right? So if I look at what's called an occupancy level, and I see that the occupancy level is, let's say, 50, 60%, that tells me that there's vacancy. That means there's apartments that there's people that are not in. So why is that? Why are there apartment units that are vacant? And that then makes me pull the string to say, are those properties rents too high, right? And then that helps me look at whether or not someone can afford that. And your example of $1,000 a month with someone making $50,000 a year, I think that that's suitable. You're talking about maybe 20%, a little over 20% of what a person would have to pay a month. Yeah. So go ahead.
Yeah. So you don't, like, with that ratio, like I typically would be around, I like to stay below 40%, but if you see someone at 24%, that they can, because the way multifamily works is like, you have to, you increase rent over time. Right. So that's how you continue to, your investment continues to grow. So that someone can receive a $25 rent bump or a $50 rent bump every year so that your investment can grow.
Right. If
they're making $50,000 and their current rent is $1,000. Now, if you're buying a property and the current rents are $2,000, people in the area are making $50,000, like, hey, this is a really tight deal. Like, there's no room for me to push anymore,
Exactly. And you're right, because you're getting a little bump up in inflation to help increase that rent rate each year. But yeah, that's a good metric you got to think of when you look at these properties. So that's a great point. So I started my company in 2013 while I was still in the Navy, after that passive investment wave for about 7 years. And the mindset for me to start JID Investments was very much centered around what I did passively when I invested. Is I put myself in other people's shoes and said, it'd be really cool if I could bring money from other people I know into something where they did exactly what I did for 7 years, where they invested in a company or they invested in projects, and they brought in capital at a lower level to bring into these projects and get, high yield type returns, right? So that was my goal, and that was my business plan that I wrote down. How do I get other people I know, I've worked with, family, friends, to bring in money to then bring into companies like the one I invested with as a passive investor? So that was the business plan that was spinning in my mind. And that drew me then to that passion to do that. And that's how we started our company. And so we started in 2012, actually. I brought my vision to my accountant at the time, and my accountant was a very close friend of mine. He was doing my taxes. He's very smart, and he's down in Hilton Head, South Carolina. And I said, David, I want to talk to you about this. And I spoke to him a few times about it. And the next thing you know, he said, I love this. I want to do this with you. So I was blown away that he loved my vision. He saw what I wanted to do, and he wanted to be a part of it. So we took a full year from 2012 to 2013, putting our business plan together, getting the business stood up, building the website, talking to our contacts, putting the literature together, putting everything together so that when we took our step forward to officially launch the company, we were prepared, okay? When we got to that point, when we thought we were ready, we went to 4 gentlemen that we had immense respect for in our network that had probably combined over 50 years or 60 years of real estate. They beat the heck out of us, which was awesome. They took all of our documents, they went through everything, they asked us these questions, and they beat us up to rebuild us to be even better. And when they hand us back those documents, they said, by the way, the first thing you're going to do is you're going to sign us up as one of your investors. So what wonderful compliment that was to have these gentlemen with all this experience who beat the crap out of us for about 3 months, turn around and then invest with us. So that was great. And that's
In the
how we
chat,
launched.
what does that sound like? Does that sound like some of the things we were talking about before? Does that sound like persistence, overcoming the obstacles and challenges, consistence, where he's doing it for a year without even seeing a result? Like, how long did it actually take you to start getting your results that you actually dreamed about, you know?
Yeah, I mean, it took us probably 1.5 years because we did our first deal right after we launched, and it took a couple months before that one came to fruition. So we didn't see any revenue probably for about 15 months from the initial start, so 15 to 18 months from our initial start.
Yeah.
And so, it was a lot of hard work. It was a lot of sleepless nights. I'd go to work in the Navy at 7:30 in the morning, Oliver. I'd come home at 5 and hang out with the kids. And then I'd go in my office and I'd come out when I came out. If the sun was up, I went back to work.
Yeah.
So, when you believe in something and you want it that bad, you're going to fight to make it happen. And the good thing was, again, I had the full-time job. I was getting paid every 2 weeks. So I knew I had some security.
Yeah. So that belief is going to be the air that gets your dream off the ground, but that commitment is going to be the fuel that keeps your dream moving forward. Cool. So yeah,
That's great. That's exactly right. So, so now currently I run and operate JID Investments. I do it full time now since I'm out of the Navy. It was definitely a little bit of an apprehensive step, but I did it. And, I had to think of a lot of things, my family and everything, but I run the business full time and actually have a couple of other doors that opened where I joined a title company, and I work as an account executive in a title company. And then I started my own little business. So I have these different businesses. And again, I go back to the Robert Kiyosaki model, which says multiple streams of income. Look at different things that you can bring to the forefront to get you revenue. And so you take what you learn from the core, and there's other doors that open for you. So I only want to put this on here not to boast. I'm just showing you that there's other things I do too that help generate revenue.
Got it.
So I'm going to go through real quick some of the things in our company. I want to show you again just some of the things we do. And again, ask questions, please, and then we'll jump right into some other stuff. This is what we try to do in our company. We raise private money and equity investment, and we want to get high returns. Now, we don't typically invest in cash flowing projects. We are looking at them. We do have one asset that we manage. We don't manage, we invest in that's doing cash flow. But our sweet spot's really development, new construction and development, where we're getting our investors kind of a higher yield return, somewhere 15 to 20% a year on their money. Typically that's deferred and deferred meaning it's pushed till we get to the finishing point of the project. But we do look at some multifamily, and we're starting to get more into multifamily and getting those cash flow type distributions. But our goal really is to shoot for a higher yield return for our investors. And what we typically do is we're going to partner with developers and sponsors, and we're going to have our investors, and we're going to bring the two together, allowing the investors to invest at a level that's very comfortable, typically about $25,000 to $50,000 each. And that allows them to come in and invest on a $3 million investment raise that we're raising capital for.
John, we
So
just
I'll
had
take
a
a
question.
pause there. Yeah, I'll take a
We just
pause
had a
there.
question from Garth, and he said, "What is the minimum investment?" And I think you just said that was like 20
Yeah,
50 grand.
25 to 50,000 per project. So we are not a fund. JID is not a fund. I don't, and what I mean by a fund is I don't take 25 to 50,000 from my investors when they sign up and then sprinkle it out a bunch of different projects. Every time a project comes in that my partner David and I approve for funding, we send that out as a separate project and as a separate entity. We're going to stand a business up that's around that project. Okay. And that specific project goes out for funding considerations. So when we go out and present a project to an investor or investors, everyone has the opportunity to see it. They all have the opportunity to review the documents. They all have the opportunity to look at the details. They don't ever have to invest. It's up to them.
John,
And yeah, go ahead.
Garth was actually asking, where did you find the new opportunities?
Yeah, I find the new opportunities through the sponsors I work with. It's more important to me to align with a sponsor that sees the value of my business and what I can do for them and that they're a good fit. I rarely look at a project from a company that I haven't already approved for funding and I've done my due diligence on. And I'll explain that in a little bit.
Okay.
That's how
Actually,
I
he
find
was
my
asking, where did they find opportunities?
Oh, where are they finding their opportunities? Yeah.
No,
I mean,
no, sorry, John, for that you have.
Oh, I'm going to show you my website.
Okay,
and,
cool.
And you can come to my website. Sorry, I apologize.
It's all
And
good.
if I need to keep moving a little quicker, please let me know. You got me as long as you need. So yeah, we find our opportunities through our sponsors. We put those on our website, and I'll show you that. So let me keep going here. Here's kind of a breakdown of the projects we've invested on and we've completed, and we've realized revenue. So you could see we started small with residential renovation, and we love that. I love residential renovation. I'm going to show you a project we just finished in Washington, D.C. Northwest on Rhode Island Avenue, where we brought in $100,000, and it was just a small equity loan that we provided. But these are the properties that we've invested in. In parentheses next to the property is the number of months that we were invested in the project. So you can see the investment amount, what we earned. The project internal rate of return is what we earned on the project for the duration of the deal. So over 4 months on the first project, we made 23.6% over 4 months. That equates to almost 71% annualized over a 12-month period. So that's how we break out our data. So I'll take a pause if anybody has any questions on this. If not, I'll move to the next slide. And you could see as we increased in the amount of investment, those were properties that were larger scale development projects, 8 condo units, 20 condo units, 50 condo units. So as the money got larger on the investment side, you can see those were the larger projects. And also the timelines were a little longer too.
Yes, sir.
All right, go to the next one. This is currently what we're managing. We have 6 great projects, 3 in DC, 2 down in Atlanta, and 1 combined asset in North Carolina and South Carolina. The North Carolina and South Carolina asset is a long-term hold, multifamily, so we get paid cash flow. The other 5 are deferred returns that we're earning for our company and our investors. So you can see we went from $6.5 million now to managing $14.7 million, close to that, with projected revenue of around $13.5 million.
John, I have a question that came in
Yeah.
from James. He said, were any of these projects with first-time developers?
Yes, they were. They were.
Cool.
And that's a great question.
And then he said, if so, what criteria are you looking for when aligning yourself with a new developer?
Yes, another excellent question. I have on my website, which I'll show you, it's called an equity terms and parameters document that goes out to new developers that want to work with us. And there's criteria there. So I want to look at the financials of the company. I want to look at, who they're working with for the bank, who's the bank lender. I want to look at the types of properties they're investing in. So yes, I do have a very thorough list of criteria.
Awesome.
Yeah.
I didn't even know that you but yeah, this is really cool because if you're a person that believes it's possible, if you're a person that's committed, if you're a person that's willing to take the levels of action and go out there and you find the deals and you go make it and you can make something happen, here's John. He can partner with you. He can bring that investment right to you as a new developer, right?
Yes, exactly. So, these projects here, let's take the first one up here. This is at Buzzard Point. I'm going to show you this in a second. It's a wonderful project. It's 110 condos, about 2,000 square feet of retail. The building's done. It's beautiful. It's right down the road from Audi Stadium in DC. So we brought in $4.4 million of equity, and we did that over a series of different rounds of investment. So we brought in $1 million when the developer bought the land and it was going through the development process to get permits in order to build the construction. We brought in maybe another $2 million when they got to the point where they're ready to start construction of the project. We brought about another $1 million in after that, probably halfway through to continue to finish the project. So we were bringing in this money over a series of raises or investments, okay? So the returns we're going to earn on this are based off of the amount we brought in, the time frame, and then the proposals that we got based on this. But this project, it's about a $65 million CapEx. So the total cost of that project is about $65 million, with revenue at about 85 to 90 million. Okay. So
Awesome. That's
amazing. Right.
Thank you.
Yeah. So let me keep going and I'll stop if anybody has any questions. So every quarter I put out an update. I put a slide out and I give my investors and my contacts a rundown of how things are going with the company. So this was my first quarter highlight. We have currently about 131 investors. We're managing these 6 projects, which you can see, and I give a little breakdown of what we're doing there. I'll take a pause. Do you have any questions there that are coming in?
Yeah, I do.
Yeah.
So Perry asked, what's your typical exit for a condo deal?
Yes, good question.
Like 100% sold.
Well, no, it doesn't have to be 100% sold. We're going to be in the batting order, and we're going to be batting. Typically, we're going to be batting behind the bank. The bank's going to always get paid first, right? Their first position, which means that they are number one to get paid back. They have the most money in the deal, and they're going to get their money back first. They're also going to get paid interest, so they're going to get paid throughout the deal, okay? The second person that's batting in the deck is going to be an equity provider, okay? It could be what's called a preferred equity provider, or it could be a general equity provider. A preferred equity provider is usually a larger institution like me, but a lot bigger, that can bring in 10, 20, 30, 40, $50 million plus as equity to a project. And they are usually going to bat behind the bank. And they're typically going to get mid-level returns, I'd say 12 to 13% on their money, okay? And then the last person that's batting is my company. We're batting third usually, and we're going to get the largest return, but we have the lowest amount of money in the deal. So the biggest risk to our company really is the exposure of our money, right? If something happens or for some reason the bank has to come in, if there's a foreclosure, the biggest risk is we could lose our money. Has that happened to date? Nope. Knock on wood. We protect ourselves. Again, we align ourselves with partners that are experienced and that have done this before. And our returns, to answer Perry's question, we're typically in the high teens to low 20s for our investors. Okay,
That's
what
per
our
year,
investors
right?
are making per
That's
year.
per year. Yeah.
It's deferred. Now, in Perry's question, our exit strategy for a new construction condo project is going to be as units sell. So as condo units sell and we make revenue, we pay the bank back, we pay the preferred equity back, and then we pay the limited partner general equity back. And that's typically how we exit. Now, if the developer wants to keep the property and they want to rent it out, then we will get taken out of the project when the developer refinances the capital that's in the project, okay?
Got it.
And that's how we get out of the deal. Make sense?
Yes, sir.
All right. Here's a couple more projects. Now, we talked a little bit about what's going on with COVID. And with our company and what we're seeing is that the biggest thing is the delays with non-essential, not being able to come out. inspections on our buildings, the limited traffic to come out to see the properties, to walk the properties, especially the ones we have on the market. That's been the biggest problem in DC. Yep, go ahead.
What are you doing to take, take those issues, take care of those?
Yeah.
I mean,
So the first thing the developer has done, and she's done really well, is the virtual tours,
Yep.
virtual marketing.
like the 3D
They-
tours and all that stuff.
3D tours. I'm going to show you a rendering video here in a few, but they're doing a great job doing virtual, but they're also having people come out. It's a big building, and as long as they're separated, you have social distancing with masks on, we're having people come out. We're having people see the properties because you need to come out. You need to see those water views on the Anacostia River to see the full effect of these properties. But yes, that's one of the big things we're doing right now.
Yeah.
But the other thing we're dealing with too is, you have a lot of these lenders that are apprehensive and they're pulling out of projects. So some of the things we have to do is, okay, we lost a construction lender. What's the mitigation strategy? So now we're talking to other banks and other lenders that can come in and help us with some of the risk from the reduction in lending. So that's another thing we're dealing with as well. But long story short, we are navigating very well considering the impacts of COVID. And one of the things that I'm really proud that we do is we're in markets that are fantastic markets. Washington, D.C., Atlanta, Georgia, everything that I feel from D.C. down to Florida are fantastic markets. And they're absorbing the impacts of COVID really, really well. And they're actually starting to show with the slow recoveries, these are the markets that are actually doing well and showing signs of growth as we start to come out of COVID.
So that's DC, Virginia, North Carolina, South Carolina, Georgia, all the way down to Florida, right?
Yep, a little bit of Tennessee, West Virginia, Maryland's in there. So all of those markets right now we feel are strong markets, and we've always invested in those markets, Oliver. I'm no offense, Brian, but New York City, Chicago, California, Detroit, I love those cities, but they're not, to me, cities that have absorption, like we talked about earlier when some of your guests, very smartly said, we got the DC government here, we got the federal government, we got Amazon, we got population growth, we got good quality of living, good cost of living. These are all the things I look at when I look at the markets. And we'll talk more about that here in a second. One of the neat things we're getting ready to start looking at is opportunity zones. And we're getting ready to participate in our first opportunity zone investment. I won't go into opportunity zones. It's a very, very detailed insights, but I'd recommend if you are interested in opportunity zones to take a look. I'm happy to share some really good articles if any of your folks here want to listen, but it's a wonderful way to protect your money and on your taxes mostly. So, but we're getting ready
That'll be another presentation.
Absolutely.
That's a big juggernaut.
That's right. Here's our website here. We'll go to that here in a sec, but here's some of the new opportunities that we have coming up. We have an opportunity zone investment. We're starting to look at assisted living. I know it was hit pretty hard with COVID, but it's moving along real well, and we think it's a great asset. And then we have some new development and new construction projects that are coming in our pipeline as well. We have a lot of projects right now that we're looking at, and it's just a matter of whether or not it's a good fit. You can't tell your investors on a Monday that we're struggling a little or having some challenges, and then on Tuesday go out and try to raise money, which I'll talk about here in a few. And then I have a couple of other things we've been doing. I do a lot of podcasts and information. So if you want to learn more about us, you can jump on there. And then there's my contact information. So I'm going to jump over to our website because I definitely want to share that real quick, if that's okay, Oliver. And I just want to show you kind of what you can see on our website when you come on. Let me see if I can grab it real quick. So let's see here. Does everybody see that screen there, Oliver? You see JID Investments?
Yep.
Okay. Yep. So this is our website. You can visit anytime. We just redid it and revamped it, so it looks real cool. And you can come down, you can click on Get Started, see both our funding services and our investment services. If you're an investor or you're a developer, you need capital and you want to work with us. This is a shot from our Peninsula 88 project down in DC.
Hey, is that Javon?
Yeah, that's Javon. Yeah, you know Javon?
He's at our meetup as well.
Very cool. I didn't plan that, I promise. Javon's a great guy. I love him. He's really good people, and we've grown a great friendship. So I'm very happy to know him and work with him. You can come down here again and click on our funding services and our investment services. There's some stuff again that talks a little bit about what we're doing, what we've done. And then here's our projects, our current projects, which you can cycle through and see for yourselves if you want to check that out. And then on the bottom, you can fill out some information to get in touch with me, learn more about what we're doing, set up an appointment to talk more about us and our projects and our investments. Under the overview, this is neat because everything I'm talking to you about right now I have available right here on the left-hand side. And you can click on any of these documents and it'll tell you everything about what we do, including our really cool newsletter here that I put out every 6 months that shows you all about our projects here, which is pretty neat. So that's available at your discretion. Going to our services, we have funding services. This kind of is for our developers and our partners that we work with. Remember I told you about that equity terms and parameters document, Oliver? That's available online.
Cool.
And then we have our funding services process. So this is how we fund deals. This is how we talk to our developers on what we're typically looking at when we invest in a project that's raw land going through development, how we structure our projects.
So James, this is definitely where you would want to go view if you're
yeah, and this is available,
have them
public
invest in your deal.
information. Yep, public information. You can see this. This is a stabilized property that we're going to invest in on cash flow. Here's a residential renovation project. If we do those, how we structure it. And then I have a step-by-step process here you can see on how we walk through our developers on when we're going to fund a project. So they know exactly how we're going to do the deal, how we're going to fund it, what we're going to do, what we say we do.
Yeah.
And then on the investment services side, this kind of walks you through how to become an investor in our company, along with the associated documents. Yeah. Right there. Down here, these are the different asset classes we invest in, so residential renovation. And then down here is how you can invest with us. Dollars, partnerships, self-directed IRAs, corporations. So that's kind of a rundown. And then real quick, I'll show you on our projects page, if you come here to our current projects or our completed projects, you can actually click on a completed project or a current project. So this was a project we did on, like I said before, 810 Rhode Island Avenue Northwest. We brought in $100,000 of capital, and it gives you a rundown, a little kind of case study on the project with the pictures. And then you can click on the site. You can go to the project site and you can see the project. You can look at the pictures and go through. So we're very transparent. We love to share our information. Also have podcasts I've done. You can watch podcasts that we've done with Joe Fairless and some of the folks in the industry. And then some media releases and contact information.
Love that.
So that's our company website. And then what's really neat too is we have a quick video I want to show you guys. This is real cool.
I definitely want to review your do's and don'ts.
Yes, we're going to get to that. Yep.
Yeah.
This is our YouTube page. You can come over to our YouTube page. And then here's a quick video of our rendering for Peninsula 88. So this is down in Buzzard Point, if you guys can see that, which is pretty neat. So let's go to do's and don'ts, because I know we want to talk about that. Thanks for your time watching that.
No, that's awesome.
Yeah, no, I want to talk to you more about how to raise money, because everybody wants to know how to raise money. And I'm going to just kind of do my best to explain what I feel is the best way to do it. So we talked about the do's and the don'ts. The first do, I think, is, again, you gotta sit down and you got to put your business plan together. And if it's going to be raising money for properties, whether you're going to go out and buy property and you want to bring in money from friends and family or talk to public investors, you got to be able to communicate, educate, and follow up with your investors. You got to be able to talk to folks very quickly, bringing them into your world of what you do, capture their attention, and be able to communicate with them what you do. So that's very important. And as you do this more, you're gonna be able to do it, like the flip of your hand, turn the light on. You're gonna be able to do it really, really well. So that's the first thing you gotta do. The next thing is you gotta put your paperwork together. You gotta be able to show people on paper what you do, because if you talk to them and everything, that's great. Something may resonate in their mind, but after a while, they may be like, yeah, okay, I understand what this guy does, but I need to read it for myself. I wanna be out, drinking a cup of coffee, whatever my beverage is, and read about what these guys do. And that's why you have to have very important paperwork. And you start at the top, the tip of the iceberg, bring them into your world, and then bring them down that iceberg to give them more information. Always start with your family and friends. The reason why I say that is because they're going to give you the brutal truth. They're also going to be the ones that are going to help you out the best the first time you start with this.
That's
And
your
if you
power
bring
base.
that's your power base, exactly. And that's your inner circle. Is go to your family, talk to your family, walk them through it, ask them questions, let them ask you questions. Because when you talk to your family and friends, you kind of let your guard down a little bit because you trust them, right? They're your blood. They know you. They love you. They're going to give you the honest truth. But it also gives you the opportunity to practice your pitch so that when you go out and talk to people that are not your friends and family, you get some great takeaways. And when you talk to your friends and family, you know, tell them, hey, take the gloves off. I'm a big boy or a big girl. I'm ready. Hit me with your best shot and let them tell you, and don't be afraid.
In the chat, if you don't mind, let me know if you're looking to raise money for real estate deals. You can keep going, John. Oh,
Okay.
yeah. Just saying yes.
Yeah, no, this is good. So now I'm working down
Just saying
that
yes.
yeah, that
Voice
iceberg.
yes.
Yeah, keep going. That's good.
Cool. Yeah,
When you're
they're
going
loving
down
it.
that iceberg, you know, now we're at the point where we're on that iceberg, or tip of the pyramid, I should say, not the iceberg, but the pyramid. Now you got to get the word out to the world, right? Like Perry, Brian, you guys want to go out. Melissa, you want to go out there and tell the world about what you do. So how do you do that? You got to market. You got to advertise. LinkedIn, Facebook, social media, YouTube. We have the power of the internet to spread the message to people. And it's very important that you utilize that. Capture who your contacts are. You know, everybody has heard of a CRM, Communications Resource Management, where you track your people. You know, Oliver's got, I'm sure, thousands of contacts that he goes out to, talk to on occasion. He knows who to talk to. He knows who to share with. And that's very important. Network. Go out and network. Once things get better, although you could do it really well on Zoom and you're doing it today, go out and go to workshops. Go to workshops, conferences, and network in those groups that you want to try to attract people that you want to talk to, okay? If you're an investment person and you want to raise money, why would you go to a workshop that's centered around something that you're not looking at doing in real estate, whatever that may be? Go and talk to people that are interested in helping you raise money. Go and talk to people that have done it for a living, okay?
Yeah.
If you start talking to people out there and you start getting interest, you got to make sure that they're an accredited investor, okay? And an accredited investor, you can look this up online. It's defined by the Securities and Exchange Commission as someone that meets a certain net worth or has a certain income level, okay? I don't want to spend too much time on that, but you have to make sure that when you talk to someone, if someone calls me from California and says, John, I found your website, I love what you're doing, I want to invest with you, but I'm not an accredited investor, I can't work with them. Because what I do is not open to the public. It's only open to those folks that can invest given their level of net worth or income. Does that make sense?
Yes.
Okay. Now, as you start getting some deals down or you start looking at doing some things and you start talking to people, you want to build up your performance, your stats. You know, what kind of properties you're looking at? What markets are you in? What are the assets you're going to invest in, right? Put together some information on your performance. How are you going to protect the money of those that are going to bring their money to you, right? What are you building as far as what's called collateral, all right? I'm more important about protecting my investors' monies so they know that they can sleep well at night, because the investment returns are going to speak for themselves if I'm doing my job, but I want to make sure I protect their money, all right? And then, you know, besides the numbers, you know, you got to also bring your own money in. Okay. And I know Oliver said that, you know, we want to always look and see how we can help use other people's monies, but at the same time, you know, money talks and you know what walks. So you got to be able to at least try to bring in a little bit of money, whether you borrow it, whether you raise it, whether you save it, whether you have it in investments that you can bring in, but you always want to put your money where your mouth is. It's very important. And then the last thing on the dues is we look at this as a team effort. Right? Everybody wants everyone to succeed. So if you're looking at a deal, you should always look at it as how does the developer win in this scenario? How do I win in this scenario? How do my investors win in this scenario? And if you can't say with an honest face or an honest, you know, vision that everybody's going to win, then it's probably not a good deal to get in. So
Yeah, 100%.
so those are the do's. I'll take a pause, Oliver, if you guys have any questions or anything I'm missing or anything we want to expound
Yeah, I mean,
on
honestly, the biggest thing that, and we talked about this last time. I want to make sure everybody picked up on that. But like, where's my marker? Let me see where my marker is. Oh, here we go. All right. So John was saying all the stuff John was saying in the dues, right? And we talked about this last time. How do you take a contact and make it a contract? This R, the R. You take a contact and you make it a contract with the R. The R is relationship. All of this stuff John is doing, he's building relationships with people. Most people just want to just like, hey, this is what I have to offer, and think someone's going to buy it or think someone's going to invest in it. No one's going to invest or care about your idea unless you have a relationship built with them. All right?
That's very important. One of the things that I want to do as I get a little older is write a book. And the book is going to be The Power of the Letter R. And the first chapter is going to be relationships, because relationships are so important. And as you get better at this and you start talking to people, you're going to get so good at it. But at the same time, you always got to think to yourself, how do we make this work? How do we make this work? Where do I add value? If you could show people how you add value in business, you are going to be very, very important to them. And if you could even then take it and show proof of concept and performance and results, that's another R, you're going to see that people are going to be around you. I mean, we have 135 investors right now. And that just didn't happen overnight. It's very difficult. You got to beat the street. You got to go out there and talk to people.
Actually, John, you bring up a really good point.
Yeah.
Can you tell us how many people did you have to speak to get those 135 investors?
I've had to talk to well over 200 people, because there are people that just haven't decided to join us, and that's fine. And it's because either
But with social media, I bet you it's even more than that, John. You were saying you have a 4,000
absolutely
followers on LinkedIn. I mean, you've probably put yourself in front of like 10,000 people, to be able to get that 100.
That's probably right. You're absolutely right.
Yeah.
And it's been a 7-year journey, and it's still going. And you're right. You have to get out there. You can't just expect everybody to come to you. You can put stuff out there to attract people, but you're going to be on calls. I have a Word document that's 50 pages long, and it's different scripts on how I talk to people just to bring them in. But you got to be able to talk to people from your heart. You got to be able to talk to people from your brain, and in a way that it connects with them, that they see.
Yeah.
And
I had a question coming from Brian. He said, where do you find that you meet the most potential investors?
Social media is real good. I go to LinkedIn quite a bit. I try to connect with people on LinkedIn. And when I go and network with people, I belong to a few local area networking groups. I talk to people in either my industry, or I always look to try to find people that are doctors, lawyers, healthcare professionals, business owners, CEOs of companies that, are in my local area that I can meet with. And then I talk to my investors quite a bit who have been with us. And I ask them, who do you think in your network would like to make the type of money you're making and be a good connection for me to talk to that could come on board? One of the things that our investors love about us is that there's no requirement or commitment to invest with us by becoming an investor. So they're seeing some great projects. They're getting to see everything. They get to see my secret sauce, but they don't have to invest. There's no pressure. There's no requirement. There's no obligation. They could just pass on an opportunity after they beat the heck out of me and look at something else. Look at the next one that comes in. And they have access to me. I'm always available. So I think it's really a matter of being genuine, Oliver, when you talk to people and utilizing your resources to identify. Now, there's good groups out there that actually will send you leads. They will work with you to find accredited investors. But you gotta have some money. You're talking thousands of dollars there. And it's just a matter of whether that's a good return on investment for you, if you want to go that route. Yeah.
That's awesome.
Yeah, so let's talk about the don'ts real quick, right? Because there's do's and then there's don'ts, right? So you don't want to always tell your investors that every deal is going to be guaranteed to give you a certain return. There's no guarantees in anything. No guarantees. The only guarantee we know, I hate to say it, is we're going to pass. That's a guarantee. But outside of that, there's no guarantees. So I would never recommend coming in and tell your investors that you're going to get them the highest end of that return that you think you can get them. Be realistic, but at the same time, be conservative. I like to set the bar low. I under-promise and over-deliver as much as I can, and that's how I operate, because I want people to be overexcited when we finish a deal, rather than saying, "Yeah, we're going to make 20%," and I make them 15 or 14%, which is still very good. Don't inflate your numbers. If you're doing your due diligence, and you look at the sponsor, and then you go to the market and you start looking at demographics, like we said, you start looking at comparables on those types of properties. What are things actually selling for? Do they align with what the sponsor's saying? And if those numbers don't align, then that's probably a call you got to pick up to your developer and say, hey, look, I know you said I'm going to get this, but this is what I'm finding in the market right now. Where's the disconnect? Why am I not seeing that? Okay? Be conservative. Don't invest with that person who calls you from California. I hate to pick on California. I'm sorry. I know we have some folks on California, but don't pick on someone that's out of your local area. Let's use that, who's not accredited, and you want to bring on board to have invest with you. Now, if you live in a certain area and you have a close friend, or you meet someone, a colleague at a networking event, and you get to know them really, really well, and you show them some of the things you're doing, and you understand that the investment they're bringing into a deal with you is not rent money or the kids' college money, and you want them to work with you and they're not an accredited investor, then you have to make the call, because you can have them work with you. They can invest with you as a non-accredited investor. You just got to make sure that you know them, and what the SEC calls engagement. Okay? They don't define what that is, but they say it's called engagement. There's an existing relationship. Okay? So that's how you can do it. Don't cover up a bad deal. Always talk about your bad deals just like you're talking about your good deals. My worst deal on that checklist of 16 I showed you I completed was a property I did out in right by La Plata in Charles County, Maryland. I invested with a borrower who we did 3 deals with before. Went great. Gave him all the money. I said, here's $200,000. Go buy the property. Go do your renovation. Didn't go so well. I didn't go out and look at the property. I didn't walk the property with him. I didn't do a good job looking at the numbers. And so I learned the hard way what happens when you don't do your homework. Good news is God is good. I took ownership of that property. We didn't have to go through foreclosure, thank God. We got ownership. We put the house on the market after I put about another $40,000 of my own money into the property. And I sold it for about 98% of what we invested in on the property. So I got my investors back 98% of their money. And then I had some very, very one-on-one, hand-on-hand conversations with the borrower, and he was willing to pay us back so far $25,000 to $40,000. But I'm still dealing with that property right now. That was 5 years ago, and I'm still dealing with that property. So,
I mean, John, I really appreciate you bringing that up, because, you know, the people who are successful in life, they actually make mistakes. But the thing that differentiates them from everybody else is that they actually learn from their mistakes, and then they continue to move forward. They continue to stay committed to the game over the long haul, right?
That's right. I couldn't agree with you more.
Right. Can you tell me what you would have done differently if you had the same, like if that same opportunity came across your desk today? What would you have done differently?
Well, I would do what I'm doing now. I would make sure that I totally and completely understood the market. I would make sure that I compared those numbers that I had in the pro forma. I would contact some local area realtors and get a non-biased, objective analysis from their perspective of what properties you're selling for. I would have gone down to the property and I would have asked a lot of questions. How are you going to clean that pool up? Did you get that pool inspected before you started painting it because there may be a crack in there? These are the things I would be asking. I mean, how are you going to fix this? what's the risk of being seated right here, right across from the water? Is there flood zone issues? These are the questions. I'm serious. I mean, this is what I would
Yeah,
have
these
done.
are the questions you learn from. This is
Absolutely.
This is why getting your butt beat sometimes is a good thing, because you would never have this level of depth of insight if you didn't get hurt on that job. You know,
Absolutely. And that
Luckily,
stings.
and luckily, the reason why you were able to turn that around is because of your commitment to yourself, your commitment to your investors. You didn't allow that one knucklehead to totally disrupt your entire plan. You took back ownership of the property and stayed committed to it and brought it to the finish line. I love that story, man.
That's it. And I learned, and a lot of sleepless nights, a lot of sweats, a lot of fear or concern that we weren't gonna make it. And so you're right. You know, that's what you remember. Failure's okay. You know, you don't want to fail, but it's okay, because that's how you learn.
You're gonna,
You know?
no matter what, you need to expect failure, especially when you're first starting out. You need to expect it, know it's gonna be there. But those who persist, those who stay consistent, and those who stay focused are going to just continue to move through it. I mean,
Right.
I've faced challenges in every area of my life as I'm looking to go, and I'm going to continue to face more. I already know it. I expect it. You have to expect it. And
I
then
agree.
working hard and working through it isn't a problem, because you already have trained your mind to expect it, right?
We're not invincible. No one is, right?
Yeah.
So if you take risk, you got to understand what you're doing. And if you decide to take on a level of risk you're not comfortable with because you want bigger returns, that's fine. But you got to have an answer, especially when you represent other people. If I'm representing 135 investors and they invest with me on a project, you know, it's not just my money. It's people that I know that trust me, that have a relationship with me. And it only takes one terribly bad deal that you can't recover from, and you're done. You're done. So, all right. And then the last point. Oh, I'm sorry. Go ahead.
No, go ahead. You finish that one. And then
Yeah, I was just going to say, you know, if it sounds too good to be true, then it's too good to be true, you know? So, you know, you should be looking at deals that, you know, you would invest in and not that you wouldn't invest in. So you should be able to bring deals to your investors, like I say, on a silver platter, where you've done all your homework and you're taking a lot of the work off the plate that they would have to do. They're still going to do their due diligence. They're still going to review your deals. They're going to still ask you a million questions, but you've gotten a deal from maybe down here in the process to up here, right? Do it like this. This is where it's at now because you've done all the work to get it up there. And that's what we do. So
it's adding the detail to it. So
exactly.
I have a couple questions come through, and I really appreciate everything you brought to the meetup.
Yeah.
So these are the last questions we have.
Yeah, and I'll leave this slide up. This is the last one. Everyone can read. I don't need to cover it, but we can definitely go through questions now and
all right,
more hands-on, please.
So Brian asked, is there a particular format of advertising that you find is the most successful in today's market today's environment for finding passive investors or potential investors?
So if it's something that's social media-esque and it's non-cost and you want to do it without any resources out of your pocket, the answer to that is no. There's no silver bullet. There's multiple ways to do it. Twitter, Facebook, LinkedIn, Instagram, YouTube. You have so many different handles. What I try to do is I use my website as the primary platform. And then from there, I branch everything else out, you know, the YouTube. So that's kind of how I do it.
And Michael said in the chat, no, this is very important. You need to be very careful about how you do your advertising, especially if you're looking to raise money. You know, there's different 506B and 506C, you know, type of investments. So you definitely want to, you know, dig deeper into that.
I didn't get into that. That's a good point. Yeah. So
that's a totally different juggernaut.
Totally different juggernaut, but you're absolutely right.
We could spend an entire presentation on 506C and 506B.
Well, at the end of the day, you just got to be aware that you can't generally solicit a deal if it's under a certain category. So that means you can't talk about returns. You can't talk about the specifics of an actual deal that's on the plate. So that's a great point.
Yeah. And then Michael also said SEC regulations are very non-transparent regarding advertising for investment products and who cannot be advertised too. So yeah, I mean, it kind of falls into what you were just saying.
Exactly. Great point, Michael.
Yes,
right.
Sir. And then James said, John, you mentioned your company is not a fund. So I assume that means investors get to decide what properties to target with their investment with you.
Yes, that's right. They get
Yeah.
to decide based on what we bring forward. So if
Love
you're a development person and you like development, and the development deal comes in, that may be one you like, but it's up to the individual. It's up to the entity what they want to invest in. But they get to see everything. They see all of our legal documents. They see our, I know Michael mentioned 506B and C. They get to see our private placement memorandum, which is a very detailed document that they can go through. And you know what? At the last minute, when they need to decide yay or nay, and they say no problem. That's fine.
Yeah.
We'll move on to the next one again.
Well, that brings us right to our another question. James also asked, are you also accepting investor money even if that person has not selected a targeted property yet?
Well, so again, if you decide to become an investor with us, you fill out some paperwork. You can self-verify if you're accredited. If you're not accredited, again, we go through a different process. We got to get to know you better. We got to make sure that we understand your certain specific situation. But you fill out our accredited investor questionnaire, and then once you complete that and we approve it, you're on our list to see every deal we bring forward. So at that point, you're on my list, you get to see our deals, and you really get to decide when I bring one forward if you want to invest on it or not. That's really up to that individual when they see a deal.
Yeah.
Does that answer the question?
Yeah, that was perfect. Yeah.
Good.
Then Michael's, he said that he's, he also can help with capital raising, and if anybody has any questions, you can reach out to him. So
yeah, absolutely.
Yeah.
These are great questions. I want some more hard ones though. Where's the ladies? We want to hear from some of the ladies.
Yeah,
The ladies usually ask great questions.
One thing that I wanted to actually leave on with, or I got two questions for you.
Sure.
What did you do to increase your belief, like when you first got into the business?
Yeah, that's a great question. I've always been a person that loves people. And I don't mean to get too faith-based here or spiritual, but I'm a Christian. I love people. I love sharing. My mom and my dad, my mom used to go up to people and she didn't even know on the street and start talking to them. And I love that about her because she wasn't afraid to ask people how they're doing or, what their names are. And it was great just to see the joy in her heart. And I love that. And when I was in the military, I enjoyed talking to people so much so, and I learned, I became like a psychiatrist, right? I knew the good people that I knew that were good people I want to be around. And then I looked at leaders that I was like, man, that person's crazy. They're thinking some crazy stuff. That's not the type of person I want to be, but I still learned from them. So I've always been a people person, and I love bringing people together. And so that's really the drive in my heart is I got something good that the Lord's blessed me with. How can I take that to others? And that's been my business plan, Oliver. And I'm totally being genuine with you is I had success for 7 years as a passive investor. I've just taken that and I've brought that out now to as many people as I can. And I want as many people that can do that if they like to. I'd love that.
Love that. Love that. And the last one that I want to ask you is, what's your plans for the future?
That's a great question. Well, we're in a really good transition point right now in our company. We're growing, and the question is, how do we scale? How do we, build out the company this way as we continue to build up this way? So, it's just identifying areas in the business that we can improve on. Like, I'd love to have someone help me bring on new investors. Introduce me to new people. How do I do that better? How do I get the right resources in place to help? I want to do it controlled though. I don't want to do 10 projects a year. I'm comfortable doing 1 to 3 projects a year. If that, I'm happy. But yeah, I love what I'm doing and I want to just keep doing it. So like when people say, what's your 1 year, your 3 year, your 5 year? Well, I want to get our current projects done. I want to liquidate our assets, get everybody back their money and their returns, and then look at what's on the future. What's the next thing that's coming up?
Yes, sir. Love that. Love that.
Yeah.
So guys and everyone, ladies and gentlemen, right? We have the next meetup on June 27th, and we're going to be bringing to you Brian Kinney. He's going to show us how to analyze deals. So with that, if you guys don't have any more questions, we're going to end today's meetup. Do you guys have any more questions? Let me give you a minute to answer.
Yeah, Oliver. Good morning.
Yeah. David, how you doing, brother?
I'm hanging in there.
Good.
Are you gonna send this recording out? I missed like the first half.
Yeah, I can
iTunes.
send out the recording, and then John, are you good with send me?
Oh yeah, you're all welcome to reach out to me anytime. Oliver, please pass on my contact info, the website, and if anybody's got anything I can help with deals, questions, anything that we went over today, I'm happy to talk anytime.
Leah asked, interested to hear how the deal at Peninsula 88 evolved.
That's a great, Leah, we should probably catch up for coffee and maybe after, that's your wife, Leah, right?
Yeah.
Yeah, after you put the baby down and we can sit down and talk. I'd love to talk to you and Oliver and anybody else. We could walk through it and I can give you the case study on that one. That's a big one. Yeah.
How many units was that?
It's 110 condo units and about 1,800 square feet of commercial space. There's the rendering behind me if you can see it.
Got it. Yeah.
And that building's finished right now. It's about 45 of the 110 units are under contract, and we just got our certificate of occupancy on Friday.
That's a big one. That's a big one.
Yeah, it's huge.
Yeah, no, we actually, I mean, certificate, I don't know, DC is very difficult with getting a certificate of occupancies. And honestly, it's like you finished all of the construction, you've done all of your work, and then all of a sudden you got to go across this last hurdle of paperwork. And it's like, oh my goodness, you know, it can.
Yes, it is.
Yeah.
It's a lot of work. You know, the developers, God bless them, they're really good at what they do. And that's why we spend a lot of time on the front end to make sure that they can do all of these things because nothing ever goes as planned. Every one of the deals we've done have gone a little bit past when we were supposed to finish. The good news is we made more money, but at the same time, you got to be prepared for that.
Yeah. Well, I appreciate everybody, Mustafa, Joyce, Don, Michael, Brian, Perry, Eduardo, Melissa, Leah, Garth, James, Yasanka, Rocco, and then William, and then Marilyn. It's great having you guys all here. I think that was the last bit of questions that we had. Great presentation, Perry says. Thank you, Oliver.
Thanks.
Yes, we'll do. The next one's on the 27th, June 27th. Actually, you know what? If you don't mind, let me know some topics you guys want to hear about, you know? That'd be helpful.
Oliver, this is a great group. I was grateful to be here today. You did a wonderful job. You got a great group of people here. And you're doing wonderful things. And I wish everybody all the best. You know, have fun with this. This is fun too. You're allowed to have fun. It's a lot of hard work, but you can have fun.
Yes. Eduardo's like, as always, what a quality group. Thank you, John.
Yeah,
Oliver, and
I
Oliver.
concur. Today was a great session. You know,
Thanks, David.
Thank you, John. It was
Well, I'd like to come back too as a participant and listen to some other folks too, because I want to learn. I want to learn more.
Cool. All right. Well, it looks like that's everybody's saying thank you, John and Oliver. It's always great information. Garth said, would love to circle up with you. Okay. Yeah.
Absolutely.
We'll definitely, Michael. Circle up. Stay safe, everyone.
Oliver, I joined the.
Yeah, go ahead.
Oliver, I joined the baby club.
You did? Congrats. Oh, is that the baby in your hands?
That's a baby. So beautiful. Look
My
at that.
second. Thank
Congratulations,
Oh,
David.
wow. How old is he or she?
you. He's 3 weeks.
Wow. Unbelievable. Can we see his face?
Yeah. I wish he may.
Oh.
I'll try.
Oh, that is so precious. You kidding me? That's awesome.
Thank you.
Yeah,
Thank
that's awesome, brother. No, it's honestly, it's such a amazing. I'm lost for words now.
Yeah, man. We got to get these deals done.
Yeah. Yes, I mean that's what we're really doing it all for, right? Is our family, our and leave a legacy, leave a financial freedom, all the stuff that you guys were saying in the top,
Exactly.
Absolutely.
Exactly. Cool.
Love it, man. I appreciate you
All right.
sharing that. That's awesome.
Yeah, no problem. All right. Take care,
Congrats,
guys.
David.
Thanks,
Thank you,
guys.
John.
Keep
All the
putting
best.
one foot in front of the next.
I'll try.
All right.
Thanks, everybody. Have a
All
good day.
All
All
right.
right. Bye.
Bye.